Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Palantir Technologies, ticker symbol PLTR. And here I'm looking at it at the 1 hour time frame, but I'm actually going to switch it over to the 10-minute time frame because that's about how much time we have left before the market closes on August 5th. Current price is trading just below $24 a share, being down about 3%, 3.25% on the day. And this was after, a pretty big gap down between the after hours on Friday and pre-market today, hitting a low during pre-market trading of $20.69, opening up the day at 21.74 and going up from there. So it does look like we did bounce from, a couple technical levels that I have highlighted here, one being 21.85 and the other being 22.36. If I flip over to the daily time frame, we can see that 22.36 is the 786 from this Fibonacci retracement, and 21.85 is this prior high that was hit on November 21st. And so, with that being a pivot high, I was thinking that could be a pivot low. We get a bounce from there, finding support also corresponding with this downtrend. And I did put out a video yesterday, right before I did the live stream, and that was on Palantir, going over how I had noticed some, unusual options activity thanks to unusual whales that occurred on Friday. Orders were placed on Friday, and they were suggesting that price would be coming down. And, now that we have seen this pretty massive candle coming down to that low of the day, not considering that pre-market price of 20.69, low during market hours of 21.23, we have seen this nice bounce. So coming up from that low to current price over 10%, about 12, almost 13%. And so I am not sure if those calls, or if those puts, I should say, were closed. That's something that we could look into in unusual whales. But I thought it would be nice to, just look at some options activity, unusual options activity, with 10 minutes left in the market before it closes, because maybe we can get a signal if there's a whale betting on Palantir going up or down after the earnings report comes out. And so we can look into that. We can continue to look into it after the market closes. But I thought it would just be nice to do this now. And so here, this is unusual whales. I've got Palantir searched up there, 258 results per page. And I'm only looking at orders on the ask side, orders that are bought. And so, to see if there is a bias towards going long or short, and it does look like we have a mix here, almost 50-50, but it does look like volume is more in favor of the bulls, whereas premium, I guess, I'm still, I'm still getting familiar with this. Oh yeah, so premium over here, so it's a little bit less on the bullish side, but as far as volume, it looks to be a little bit more in favor of the bulls, I think. But, that's something I'm still learning, so take that with a grain of salt. And so this is all just, live options ranging from, any sort of expiration that's on there. I don't have a limit on that or restriction on that. And just trying to see if there's anything like alerts that stand out around Palantir. And so maybe, we just want to keep an eye on this, as we do have about 8 minutes left before the market closes. Maybe we get some signals, but here it does look like, so let's see, this is something I'm still, kind of learning how to navigate unusual whales, as I did just start this subscription on the 1st, so it's only been about 5 days. And it doesn't look like anybody's really joining for the stream now, so I'm not too concerned, but I was hoping that we might see some kind of signal here, and I might actually just check on YouTube to make the sound as good, because the last time I did an earnings stream, the sound was kind of screwed up, so I just want to make sure with that. Hey, what's up? I'm just making sure the sound is good because nobody was here in the live chat to tell me that it's not doing good. I just want to. Yep, okay. Sound check works. So, yeah, I'm just looking at unusual whales to see if there's any unusual activity around Palantir right now. And, I'm still fairly new to unusual whales, so I can't really say. It does look like there are orders that are both bearish and bullish. I'm only looking at orders on the ask side, so those that people are buying. And, this one, bullish. But let's see. Yeah, and so we can look at this contract. This is underlying. Yeah, I mean, I'm still, getting used to this, but the average fill for this contract, 25.5, $25.50 call for August 9th. It does look like the average fill price has been going up, so this has been going up since about, let's see, what time is this? Between 2:45 and 2:50, so just about an hour ago. And it has been going up, that premium. But, it could be tanking tomorrow, so who knows. But, yeah. Let's see. Yeah, there's some bearish activity. This is, let's see. And these premiums are all about 1,000. So maybe I want to boost that premium search criteria to be a minimum of $2,000. Just about 6 minutes before the market closes. And we can see some more bullish activity. These contracts are, looking pretty hefty. These are all expiring this coming Friday, it looks like. And I might actually, do I want to filter that? Yeah, I'll filter it just for, and I'll also do this one for the 16th. So this Friday and the Friday after that, we can see what the sentiment is. And I don't know if it's unusual whales or my computer, but it does seem to be a little lagging in the response time, probably just because there's so much data being processed. Oh man, I just want to put, yeah, see it's lagging right here. Come on. Okay, there we go. And so that should give us all of the contracts that are being open, on the ask side. We're taking some time here, and looking pretty bullish in the last 4 minutes. The market's open. Calls expiring here. Let's see, what is the ask price is risking about $100 for a lot of these orders. This one less so. People are putting thousands of dollars on this, and so I don't plan on partaking in any of these. Although one thing that I was noticing is the let's see, I'm just looking at my other screen here. So it's I noticed Palantir puts over the weekend. Now it's look at all this bullish activity. So it seems like a lot of people are betting in the last few minutes that price will be going higher. Premium is $50 for some of these. So maybe this could be a fun in and out swing, going bullish, risking $50. I don't know if I do my trades on my phone, so that's why I'm looking over here. I guess nobody's tuning in still. It looks like people lost interest. But yeah, so looking at calls for these are some bearish ones though. So and this does look like it's a multi-leg strategy. So yeah, let's see, 29. The average fill is right around. Yeah, I mean, maybe I'll do a, just having fun with it. 29.5. Here's another one, 27.5. Let's see, what's got some. Maybe I want to look this up on the screen so you guys can see what I'm looking at. So options, looking at calls for this coming Friday. 29. Yeah, this is better than looking on my phone. I'm just more used to that. So 29.50. That's not too many contracts over. It's a 50-cent one. So let's see, 29. Maybe. Yeah, so I just got a couple minutes left. I might get one of these just for some fun. Let's see. Switch back over to unusual whales. What's going on here? Bullish. This is a $25 call. So yeah, I mean, I think I'd risk. Let's see. Just trying to be thinking about this. Still got a little bit more than a minute left. What is going on here? So here's a put. This is, yeah, I don't know, the ones that see all these, ooh, thousands of dollars here. Lots of money. So it looks like there's more bearish. There's a lot of money on the bearish side here. So maybe this is suggesting that price will be going down. You know, this is 34,000, 23,000. So yeah, maybe that's. I was thinking about doing. I saw all these bullish ones, but then here, you know, just the order size here, that does suggest that it's looking. But there's a 38K one. That's at a strike of 30. All right, so just to have some fun, I bought a call. Just one call, risking 20 bucks. We'll see. But yeah, a lot of bullish activity. I was kind of thinking it seeming more bearish here because there's these big orders, you know, it's like $50,000 right there on the bearish side for buying puts. But then over here, you know, this 38K one. And so that is, you know, a strike of 24.50. I bought a $30 strike call for 20 bucks, and you know, we will see what happens. Hopefully, since we saw the price dip, yeah. So what I did is I bought one of these, and my fill was. You know, because it was going up, this data here is a 15-minute lag, and so I got this filled at 20 bucks or 20 cents. And if we look at the chart, the main reason why, you know, I don't know, just to have fun really, because I'm streaming this and because I am a shareholder, don't have a huge position, but I am a shareholder of Palantir. Because we did pull back to these levels and we did bounce, you know, I feel like that could continue higher. Like the bottom's in here, the bad news is behind us, and it could start going. Got this gap up here to 26.08. My contract is at 30 bucks, and yeah, so it's a gamble. I'm risking 20 bucks. But you know, that makes this fun. And I had exited some short positions that I had on semiconductors in the market. So I thought, you know, I made a little bit of money on those. I can risk a little bit and just have some fun around this earnings call. And so we will see. I probably jinxed it though, and I apologize for that if I did. That price, you know, we'll have to see. But I put my money on it going up, and that expires this week. So I will probably. It's Monday though, so I got a few days to play around with that. But yeah, that's pretty cool. And so we can look back over here and see, yeah, if there's anything. So I'm just gonna filter this down to only today. And if we look at, you know, the bigger orders, see, I got this premium here restricted to 2,000, but let's say if I boost that up to 10, what's that? This thing, it is very slow at loading for some reason. Maybe because I have 250 results popping up at once. So I'm going to limit that minimum premium to 10,000. So we're just going to see bigger orders, and really 10,000 by Wall Street Bet's definition is a YOLO. So, you know, I kind of want to be seeing anything above that. Yeah, I mean, what have we seen here that really stands out? You know, a lot of these orders, are the majority of these bearish or bullish? It looks like, you know, it's kind of 50-50, which I suppose is not that surprising. And so here, let's see, the call volume is more in favor of, call and premium volume is more in favor of bulls, it seems like. if I'm reading that right. Yeah, so, I don't really know, but I just thought it'd be fun to get a contract for this earnings call, risking $20. And, I could have bought, I could buy a share for that. And so instead, I'm just going to gamble it on options. But yeah, oh, cool, cool. We got some alerts here. So let's look at this. This is something that I've just been, but these are from Friday. This is bullish. So crazy. Why didn't I notice this before? Probably because, yeah, I didn't have the premium limit here. You can see it just above Ed's head, that minimum to 10,000. And so we can see the premium for these orders, above 10,000. And so this is, let's see, this one's bearish. This is, yeah, let's just see how much money is on these. I'm actually going to scroll to the top. Okay, so I don't see anything that got alerts for today, but on Friday, we got some bearish, this is ask side puts expiring this week. I'm not sure if they were open or closed, but we can see what happened. I believe I could look into this. We can see that the average fill, yeah, I mean, this is over the course of the day. So I can do it over the course of 2 days. And wow, look at that. So yeah, August 5th, this premium before open, close on Friday was, let's see, 49 cents, and then it spiked up to 138. So yeah, I mean, unusual whales, I think it's something that you really need to be paying attention to what's going on when you see alerts, when you see big orders, then follow up on them right away, because I saw this over the weekend. It was already too late. But that was a put. And so with that being said, this price of these puts has come down, still above, the, let's see, average fill. This 55 cents at close here was like 49, so still up from there. But then, there's a put, and we can see this ask here, calls expiring this week as well, 25.50. And that's a premium of 59,000, whereas these puts are premium of, I believe, over 100,000. Yeah, so that's a little bit more money, a bigger whale betting on that. So, I find that to be pretty interesting. But yeah, let's check out the chart. Let's see what's going on with it. Oh, cool. I bought one call with a strike of $30 for this Friday, $20. We'll see if I can double my money. We'll see. But, this could all just be, I don't know. I feel good about that. I just bought right before market close. I was exploring unusual whales, and I thought, why not? I'll just buy a $30 strike call expiring this coming Friday for $20. And maybe it turns into $40 tomorrow. Maybe it turns into 100, or maybe it goes to zero. It's fine either way. But I just thought that would be fun. And here we are looking at the 1 minute time scale. Did get this massive candle up just a minute ago, going up 10%, hitting a high just now of 28. So yeah, maybe that call that I just bought is going to be in the money tomorrow. Unless, that'd be funny. Maybe I screwed up and I accidentally bought a put. Nope, I bought a call, $20. So this could be exciting. Let's look at the chart. I'm going to take a step back, look at it on the daily time frame. And, that video that I put out just yesterday, I was suggesting that price would be coming down to this level either before or after earnings. Of course, we saw the whole market, tank today, but then bounce. And so, basically that downside target for me was really filled. So I feel like it's more likely to go up after earnings. But, once they are released, which should be coming out within the next, I don't know, I imagine 20 minutes or so. Excuse me. And then we can look at them. I'll read them to you guys, and we can then see how it continues to respond. But right now, trading around $28, up $4 in the after hours. So this was an excellent dip buying opportunity. So congrats, assuming that earnings go well and we do see the price continue to go higher. Congrats to those who did not, who bought the fear. Whether you were experiencing fear, whether you were or not, you were fearful, you were brave, and you bought this. You were scared, you bought this. For not panicking, congrats to those, because I know that there were a lot of people in the pre-market I saw talking about things just continuing to go down. And Palantir could have definitely been one of those things. But yeah, looking back over at the 1 minute time scale, hit a high in the after hours so far of 28.45. Still trading right around 28 bucks. So we'll see. But yeah, I'm stoked about this because I bought one contract for 20 bucks call. So let's hope it goes higher. And I might switch over to their website to see if let's see, I've got this here. I'll get to that. So 5 p.m. Eastern. Right now it should be 4:08 Eastern. So we got some time. And participants can pre-register here, so I might do that. And so since I have to enter in some personal information here, I am going to hide this screen, and then you guys can just look at the chart there. And I might actually flip over to Webull real quick. 28.65 is the high in the past minute in the after hours. So now that you can't see me, this is kind of creepy because it's like on my screen, but you guys can't see it. Creepy. DGen Ed is the company. And what is my title? If you guys are curious what my title is Caretaker of Ed. And please check this box if you would like to receive updates about products and services. I'm okay. Okay, cool. Thank you for registering for the Palantir Technologies second quarter 2024 earnings webcast. The webcast and link calendar have been sent to you or provided email address. So I'll have to look for that. I believe last time they did it on a YouTube video. So yeah, and hopefully my email doesn't pop up on your screen, but since you're just looking at Webull, I don't think it will. Yeah, my email's on my other screen, so that's good. Yeah, so I got an email from Palantir, live via webcast, yeah, YouTube. So I'll have to see how to sort that out, and I can show you what we're looking at here. And yeah, give me 1 second. Just actually close my email down so we don't get bothered by that. And let's see. I'll show you guys my screen again. And it's on Webull, so it's not too exciting. But yeah, this is the YouTube page. I can hide that banner at the top for a second. So if you guys do want the link here, you can access that. And I'll actually put it in the description of this video so you can access it. And so let's see, there you go. This is Palantir earnings call, webcast, I should say. Yeah, what's up, everybody? I see a few more people joining. I'm just making sure that, if they say Q2 2024 earnings webcast. So I'll just I'll just copy and paste that. And this is unlisted, but I'm just going to put it right here. So if you guys do want to access it yourself, you can. And then I also have the link to their investor page, whatever. It's okay. And I kind of want to go back to the page I was just on, which I can find from the description of that video. So I'm just going to copy and paste this, put this up here. And so maybe there's some stuff for us to read. Participants. Let's see. News over here. On the 5th, Palantir reports revenue growth of 27%. Sorry, Ed's in the way. 27% year over year, and raises full year revenue guidance, record GAAP EPS of 6 cents. And so we can read this now if you guys are interested, but I might also pull up the chart because we're up around 28 bucks in the after hours. Does look like, there's a lot of volatility just before market close, just to have a little bit of fun with the stream, I did buy one call expiring this week on Friday with a strike of $30. I'm risking $20 on it, and so we'll see if that, what happens with it. But really, I'm just having fun, just risking $20, and maybe it opens at more than $20 tomorrow, and I'd be happy with that. But yeah, it does look like maybe we're pulling back a little bit here. This is the minute time scale here. But, what I'd like to see is us hold above, the open or the close price here, 27.41. So let's see if we can hold that. That would be really nice. I'm not getting any 1 minute candle closes below there. Yeah, and so I might switch over to their earnings page so we can become informed on what's going on with the company for this email. And I might actually hide my, let's see, bookmarks. Let's see, view. I think I need to. So yeah, that gives us a little bit nicer review. And I will just read, Palantir reports revenue growth of 27% year over year and raises full year revenue guidance, record GAAP EPS of 6 cents in Q2 of 2024. So looking pretty good as far as things go. I think it's actually really good that we saw that pullback, that dip, because now we just, got so much more room to go. Like we've got that downside move out of the way. But anyways, I'll just read this to you guys. And so here it says that from Denver, Palantir, I believe is their headquarters there. But so Palantir Technologies, and actually I should look that up, but I assume so. Today announced financial results for the second quarter ended June 30th of 2024. And so the Q2 2024 highlights are that revenue grew 27% year over year and 7% quarter over quarter to $678 million. So that's pretty awesome. Congrats, guys, if you're long. And so here, U.S. commercial highlights are that U.S. commercial revenue grew by 55% year over year and 6% quarter over quarter to $159 million. U.S. commercial customer count grew 83% year over year and 13% quarter over quarter to 295 customers. And the U.S. commercial remaining deal value, or RDV, grew by 103% year over year and about 11% quarter over quarter. So, a lot of growth there as far as the U.S. commercial highlights. I feel like some government news is always, coming out from Palantir. So let's read about that. Here it says that the U.S. government revenue grew by 24% year over year and 8% quarter over quarter to $278 million. And that is, when compared to, 159 for commercial. And one thing that I think, is not really too surprising to me is that the government revenue year over year didn't grow as much as the commercial revenue. And my understanding of Palantir is because they've had a lot more government investment, government partnerships, deals, whatever they be referred to as, a year ago, whereas commercial was, I feel like, a little more reluctant or not hesitant. I don't know what words you want to use. Then, whereas government was, all in with Palantir. And so I think this suggests that, while this is still up 24%, seeing this 55% up with commercial revenue, I imagine that those will kind of flatten out, come to equilibrium. And, so government's still going up while commercial's up. I wonder where they'll settle at. Maybe, I guess it'd be flattening out at zero, but there's still, a lot of upside for both of those. So I think that looks really good. And I will switch back to the chart just a second. Okay, looks like we're above 28 now, so this is sick. I am loving this. I'm happy I bought one call that expires this week just to have some fun. $30 strikes. So we'll see, what happens after the call starts and stuff, because these gains could be lost. Who knows? But, I just thought I'd have fun with that, and I'm really excited. I do have some shares, but I don't have a large position. So getting a call this week to swing some premium, I'm excited about that. If you can't tell, I'm excited about this call. I'm excited about the day. The panic and whatnot in the morning. I feel like I could have handled it better, but I think I handled it really well. I've shown growth, and so I hope that you guys all have handling the market and stuff today. As I'm sure that we'll see more volatility like that to the downside. Hopefully, we're all handling it well. But anyways, I'm going to continue on with this government revenue. I just went over that. And then commercial revenue grew 33% year over year. And okay, so this is commercial revenue. What was I saying here? Commercial highlights. Yes, okay. US commercial. Okay, and then commercial generally. So this is including non-US commercial revenue. So that's pretty cool. Yeah, I would think that, yeah, like if they're, yeah, I wonder if, I guess there's apparently, no conflict of interest doing business with US companies and commercial, globally. Of course not, it's business that makes sense. But when dealing with government, I would think that, yeah, I'd wonder if there's kind of a conflict of interest or could be a conflict of interest in some deals. But of course, it's not all, based on war, conflict. I should say conflict, probably a better word to use, but could also be used for aid and things like that. So, with that being said, humanitarian aid, there's no conflict there. We all want our people to be taken care of. And so, yeah, looking at government revenue, this would be global, 23% year over year and 11% quarter over quarter to 371 million. And so, I could crunch the numbers on this if you guys are interested to see what the breakdown is of, US commercial is 159, but then commercial, okay, so I don't need a calculator for that. It's about half of their commercial revenue quarter to quarter to so yes, so U.S. commercial revenue grew 55% year over year, and so I assume that this is the quarter revenue, and that is 159 versus global or not limited to the U.S. That's 307 million. So about half of their commercial revenue is coming from the U.S. Half of it is coming from abroad. If we look at, let's see. U.S. government revenue grew by 24%. That's 278 million. But then government revenue around the world. So this is about, approximate. This is about 3/4 of the total government revenue coming from the U.S. and then 1/4 being coming from abroad. And so that would make sense given that it is a U.S. company that they would probably be partnering more so with the U.S. government. And so, yeah, I think that's pretty, that makes sense. And then here, let's see, they did close 27 deals over $10 million, closed, so over $10 million. I don't know if I said that right. And then, but, with those closed deals, I don't know if that means like secured or if they ended. I think that means that they locked them in. But I'm not sure the lingo there. But customer count grew by 41% year over year and 7% quarter over quarter. And so, that's great that there's a lot of growth there. And let's see, GAAP net income of 134 million, representing about a 20% margin. While GAAP income from operations of 105 million, representing a 16% margin. And then adjusted income from operations of 254 million, representing a margin of 37%. And then the rule of 40 score of 64%. I don't know what that means. And then GAAP earnings per share, or EPS, earnings per share, grew 500% year over year to 6 cents. So looking pretty good there. Adjusted EPS grew 80% year over year to 9 cents. And then cash equivalents, and short-term U.S. Treasury security of $4 billion. A lot of money there. Cash from operations of 144 million, representing a 21% margin, while adjusted free cash flow of 149 million, representing a 22% margin. And so, maybe I could come back and look at some of the details here, but I thought I'd flip back over to the charts so we could see what's going on. Yeah, so maybe the top is in. around 28.79, but also maybe not. Um, and Yeah, I hope that the bottom is in. I hope that this line here, 27.41, holds, and that, this would just be sick. This is what I'm rooting for, that we go above 29.83, that this launches us up higher than that. As this earnings report from February of this year, we saw a gap up going up 30% the following day. And, that was on a down day, a red day. And so we kind of, saw that here, even though we did go up, green candle for the day. I'll zoom in there so we can see it a little bit better. But we were down 2.63%. And so over here, we were down 1.76% before that gap up to 30%. And so if we're trading at 28 bucks from this close, let's see, 28 bucks, that, it's right around there, up 13%. But if we go up 30% again, that would be putting price up around 31. So that'd be sick. That's what I'm rooting for. I'm rooting for this to go higher. But if it goes lower, I'm happy to add more shares. I dollar cost average very slowly. The way that I add to positions, especially when they're like over $10 a share, because I just don't have a lot of money to work with. I try to identify levels that stand out for dip buys, and so I added at the 786 here, 22.36 this morning, and then also 21.85. And so, if we go back down to that, I'm happy to add more because I have a small position. But if we launch up higher, I make some money on that call, so that would be sick. So we got about 36 minutes before the call starts. And I'm thinking that, what's this level at that I have marked here? Where did that drawing come from? Where did that level come from? That's just this drawing that I have there, that little. So switch back over to the 1 minute time scale because we want to be looking at this volatility. I don't know if any of you guys are trading it like right now. I have, like I said, a small position, but I've kind of fallen into this trap of, I'm up in my position now and I could trim, I could take profit, but Palantir is just like, it doesn't matter if it ends up going a lot lower, I'll just add more over time. But it's just a company that I really believe in. It's not well understood. And so because of that, I think that there's a lot of opportunity for it to be going up. And you guys all know that if you're long-term holders or been holding for a while, or, maybe this is your first earnings call. I don't know if I did their last earnings call. I might have been working, but I think I did the one before. They do a YouTube video. So I might have to try to figure out how to adjust that. So maybe I can put it above me right here. And you guys can see that kind of stuff that I've been watching, stuff on Deadpool and Wolverine. I don't know if you guys have seen it, but it's a pretty cool movie. Let's see, waiting. 617 people are waiting. Got about 33 minutes before it starts. And I'm kind of actually surprised I'm not a subscriber. So I'm going to subscribe to their YouTube channel. And I personally don't like getting alerts. But yeah, I'm going to like this because why not? And the link is, I do have a link to their stream. And, so I was wondering, where their headquarters was. I thought it was in Denver, but I thought they also were in Palo Alto. So I guess that's where they were established, in Palo Alto, but they kind of fled California, as a number of companies have now in Denver. And, somebody else is, I guess, doing what I'm doing, but they're a little more successful with 6,000 people watching. How did they get that activity? Maybe they didn't have a chimpanzee on the thumbnail of it. But, Ed and I were one, so I got to have them on those thumbnails. But, let's see. I don't log into my account here, so I'm just opening up my, just seeing, Palantir I only have 5 shares, so nothing too crazy, but that's over $100. So, it's not nothing. At least for me, it's not nothing. And yeah, I'm up over almost 15%. And also too, like kind of speaking of buying the dips this morning, I got a share of Tesla this morning, and I am just stoked about that. I don't know. I assume if you guys are in Palantir, you might be interested in Tesla as well, being very interested in technology, and yeah, and data, whatnot. So Palantir, going to be already taken off. We'll be seeing a gap up tomorrow. And yeah, I mean, let's see. Stock jumps on strong earnings. Hell yeah. So this is from, let's see, is this, yeah, Barron's here. Okay, so I'm just going to read this in case, this mixes up what I was just reading from their website. But yeah, Palantir Technologies shares were sharply higher in after hours trading on Monday. Good for us. And so for the June quarter, Palantir posted revenue of $678 million, ahead of Wall Street's consensus of $653 million, as tracked by FactSet. Adjusted profit was 9 cents a share, above Wall Street's 8-cent estimate, so beating the estimates. So, just looking great. And let's see, Palantir also provided strong guidance for the September quarter. The company sees revenue being between almost 700 million. Yeah, so right around 700 million. I mean, approximately 700 million. That's funny how it's listed there. 697 million to 701 million. But at the same time, for speaking, around 700 million, but dollar-wise, $1 million is no joke. And so about a consensus at 681, above the consensus of, so it beat there. Shares rose by 16% after the report. So that's what we're dealing with now. Yeah, 16%, just under 28 bucks a share right now. We can see that minute time scale. I hope it holds, and I hope it keeps going higher. And so Palantir, I already read that. And so this is breaking news. Check back for more analysis soon. And so, we'll have to, just stay tuned here to watch it move. And if we do look at the, so the bottom's in here, I think that's pretty clear. Maybe we could see a reversal, but from current price, 27.41, I'm just going to say from up here where I drew that line, if price were to come back down here, that'd be a drop of 20%. But, let's do a Fibonacci here from the top here to the bottom, and then we can get an idea of maybe some levels that we'd be bumping into as resistance. So here the high 29.83, off a little bit there, and then the low was 21.23, so probably going to be off there as well by a penny. Can't win. 21.23, and then up here 29.83. So we got the Fibonacci retracement there, being precise, and I am going to add the 1618 to this as well, because maybe we're going higher. And so with that being said, I should probably make this yellow. Or no, well, I'll make it orange. I think orange is all right. I've got this yellow line here. I find yellow to be a little bit easier to read with the Fibonacci's. But, okay, so here, the 786, I'm going to change that to yellow. The orange is just a little too tough to read. So the 786 is at 27.99, and we're trading. I can flip over to the... just got to make sure that's locked into place. Yep. 1 minute time frame. So we're trading right around that 786. But what I think would be awesome, I think we would all think this would be awesome, is if we continue up to go past not only the full retracement here up to 29.83, but if we continue on to the one at 618, that's at 35 bucks. Let's all, that's what we're hoping for. So let's see that happen. And with that being said, I don't do Fibonacci extensions too often. It's kind of a new thing for me. So I'm just going to do that 20.33 up to this high, and then the low of 21, 23. I'm going to have to adjust all these levels, but let's see. That's 2033, so I'll draw this here. 2983, adjust that here, and this one 2123. They all have threes. They all ended in threes. Kind of odd. But yeah, so doing a full extension, we'll be getting to 3073, so that would be nice. But then the 1618 from that extension is, going to be around 3660. And so what I might do for this extension is, just so we're not dealing with all of that clutter, I am going to remove all of these other levels. Let's see. Yeah, we've got the 0. I'm just going to leave this up to maybe the 786 I want to leave. 786. 75%? Why do I have... That should be 65. Wait. 618. 618. That should be 65. That's a golden pocket. Why did I have it? Okay, so what am I thinking? Yeah, both of those. I don't think we necessarily need... Yeah, maybe we... Well, yeah, well, where's price trading at? That's right around here. I've got too many lines on this that are all white. So I'll have to change this one to blue, I think. And then we got the 786. Yeah, so those are all just levels to the upside. So, maybe good to keep an eye on those. Maybe I'll do light blue. And maybe that is better. And so we can, kind of keep all those levels in mind during the after hours. Those are to the upside. And then, to the downside, maybe I should adjust, let's see. So that is just the, that should be the yellow one. Yep, okay, so that's cool. And so I just want to see, this is really going to upside levels, so I am going to limit this to be, let's see, yeah, the 6, I'll just leave it the, well, I'll have that marked there so we know where the bottom is. Yeah, so golden pocket going higher. So, yep, and I got the 618 on there. So let's now check this out on the 1 minute time scale. We can see, yeah, these are all levels that, hopefully we're holding above. Maybe it's too much. Hopefully it's not too cluttered. I can't omit some because we have broken above these. But, actually, yeah, maybe I do want to omit some of those. Because this is, levels that would be acting as resistance. So, yeah, I can remove... Oh, let's see. The golden pocket. I'm going to remove the golden pocket from here because we've already gotten above 2741. We're above it right now. So yeah, I'm going to remove that golden pocket. So we just got less clutter. And then also with this, it's going to be tough. I'm just trying to select the yellow one. And so maybe I want to adjust this. So just move it over here so I can differentiate between those two lines. Or actually, no, because that's not the one that I want to adjust. 0.1, 22, 20, 33. What the hell? What is going on? Okay, so 2033. Okay, so that's good. I'm going to adjust it over here. 21. Maybe I'll just do it from to like there. 21, 23. All right, so there's that. Now I can click on this yellow one to adjust it. And I'm just going to remove that golden pocket because price is already above those. So I'm not really looking for those to be acting as resistance is my thought process on that. Maybe it's not a good thought process, but I'm looking for levels that we bump into as resistance. We're already above those, so I'm not worried about them. And then levels of support, those would come from this retracement here, where you do have, let's see, these levels that are to the downside, and maybe they would be acting as support. And so let's see, maybe I do want to add, what is the 236? That's 27.59, so maybe that's also a good one to be keeping up there as well. And so now I'll flip over to the 1 minute time scale. 1 minute. And we got about 22 minutes before the stream starts. And so yeah, these, basically the white lines, hoping they act as support. The yellow and the light blue, I think those might be acting as resistance. And let's see. We can't really see it here because I just need to do that. 2870 is a 786. That's from the Fibonacci extension, and that we did, wick up above that to 2879. So it does seem like it is resistance, but we might be breaking out. It does look like, we're holding this. Could be a bull flag. We could be going higher. And with that being said, I might add, a fun little. I'll start it from, let's see, right here. Fun little. And I don't want to lock that. I will make this, clear so it doesn't take away too much. And then, if I go back in time, yeah, I could do that. Let's see, that's the first wick up there. That, yeah, if I go back further, that just, because it includes the close here. So maybe that puts a bias on it a little bit, but this kind of, puts a bias on it too, that it's slanting down. So yeah, I'll just include it here. And if we start to get above that, that would really be suggesting that we're getting above. Yeah, I might actually leave it there, because that first candle, even though it did close down here, it's still more or less inside that channel. If I do it over here, yeah, that one did too. It's just getting down here. Yeah, so I think that's a good channel for us to be looking at, and that should be updating as time goes on, because I did, draw it out over to here. So that should be giving us some reference of what's going on. But yeah, it could be a bull flag, and we could be breaking higher. And so I'm just going to switch over to, here we got 19 minutes, 25 seconds left for this. And yeah, I don't know if you guys want me to, I could look over at unusual whales, but there's nothing to be too exciting going on with that. But, oh, okay, so we got some alerts here. This was, oh yeah, so that was older. But yeah, so the filter for here that I have minimum premium of 10,000. So yeah, I might actually look at some of these contracts just to kind of get to know them better, and then maybe we could kind of follow them to see, independently, after the stream, once the market opens tomorrow, to see what they're worth. But let's see. So bought a call with a $30 strike for this Friday. But yeah, we can look at this one. Let's see. I'm not too familiar with exploring the data here, but this showing the average fill price. Oh my gosh, yeah. So Monday could have been buying these at a premium. Average fill 96. It'll be $100, risking $100 for one of these. But then now, they are worth 150. And so it says that there's an issue, that YouTube is not responding. So I'm opening Studio. I might actually just do this on the screen. So here, yeah, what's going on with this? I don't really ever do this too often. Error: YouTube is not receiving enough video to maintain smooth streaming. As such, viewers will experience. And so I wonder if that's because I got these, maybe I'll close those. Palantir News. Maybe it's because this is open. I don't know. Maybe my internet's just a little weak. I apologize. Error, YouTube is not receiving enough video to maintain smooth streaming. Oh, yeah, so it looks like it's better now. It looks like it's better now. It says excellent. So maybe it's because I have those other tabs open. Maybe it's just too much data going on. And yeah, let's check out notifications here. You know, I find this stuff to be pretty interesting. Yeah, okay, let's check this out. This is relevant to us, you know. Palantir 2811 up 16.69. Hell yeah. In the after hours. Yes, let's like that. Enjoy that stuff. Darn it, still not really oversold. You know what that means, everybody? The market's going higher. Many positives, but lots of negatives tonight. Mad money. He will trash. Let's see. Let's say. Is that how you spell bot? One, I'm just going to brag. Oh, okay. Okay, so got some more followers. Cool, welcome. And yeah, I will. I don't know, do I want to read some more of that? I need to drink some water, though. Before I clear my throat, before I cough, I'm going to... All right. And so here, what I might do so we can, you know, tune in to this, but then also be keeping the chart up. We can be watching the chart. I am going to mess with my screens a little bit because we got 15 minutes before it starts. And so what I want to do is rather than showing you my display, I'm going to remove that. Now you're just looking at the Weeble display. And then I'm going to put Chrome on top of it, which looks like it's having some issues. So I have to fumble with that a little bit. Why? All right, so there we go. I don't know why it was being wonky. Okay, so now what I'm going to do is I'm going to crop this. And so, I mean, you guys can see how I'm cropping it if you're interested. We got all these crazy screens right here. It's going to go on into infinity. I feel like my hand's going to stretch if I go over there. Okay, so I'm just going to crop this. So we have, you know, I really just want to have a frame around the video here. If you guys are interested in this, let's see, 50, we'll do 75. That cuts it right around perfect over there. And then I will just do the top. 100, see where that takes us. Take that to 200. And 200 looks pretty good. You know, I can tell because of the corners over here. And so now I'm going to close that. And I will do some magic here. I'm going to shrink this window and put it behind me there. So now we can, you know, watch that if there's anything exciting going on. And if there is, then I can swap over to the display and we can watch it on the big screen. So hopefully that seems good to you guys. And what I might do actually is I might lift this up so we can see what that is. And let's see, how does that, oops, I clicked the wrong thing. Maybe I want to adjust this a little bit more to the left. So maybe a 70, let's see. Yeah, 70 I think is a little bit better. Maybe 65, too much. So let's do that as 70. I don't know if you guys care what I'm doing, but yeah, that's good for the top. So close, and hopefully that looks good. It's off just a little bit, so I'm gonna, is that better? Still off just a little bit. Okay, that's lined up pretty good with my window. And yeah, so there should be there. And we should be also getting audio from Chrome once it starts. And with that being said, with us having about 12 minutes before the call should start, I'm going to connect my headphones to the computer, and then I'll start listening to it because they'll probably play some music before it starts. So I'm just going to plug myself in, and then I'll just listen to Chrome, whatever's going on in Chrome. And yeah, if you guys want, I could put on some music, but it'd have to be through like the YouTube library, which doesn't really have the best of stuff. But that could be something nice for us to listen to. But yeah, I mean, this is all set up, and it looks like we're still in that downtrending channel, and so we'll see. We'll see what happens. Since this is downtrending, I should maybe the way that you're viewing it, downtrending like this, more likely to break to the upside, but it doesn't have to. It could come down. And yeah, I mean, we're below this close here. Nothing necessarily significant about that, but I just did put that up there. And this is kind of tight around my chin, so I might adjust this. But yeah, I did read through a good amount of the earnings report, or at least some of the bullet points from it. But I could go back to it if you guys want. And so I'm just going to pull that up here. We can see this earnings report. And if you want, I can go over some of these financial details. Or maybe it's interesting to look at the outlook rather than just like number crunching. The CFO will go over that with us. But yeah, let's look at the outlook because I think that's a little bit interesting, exciting. And so for the third quarter of 2024, Palantir expects revenue of between 700, right around 700 million. Adjusted income from operations of between 233 to 237 million. So for the full year of 2024, everything put together, we are raising our revenue guidance to between 2.742 to 2.750 billion. We are raising our U.S. commercial revenue guidance to in excess of 672 million, representing a growth rate of at least 47%. This is for the full year. We are raising our adjusted income from operations guidance to between 966 to 974 million. So good, keeping it below one. Keeping it close to 1 billion. I was thinking expenses, but yeah, no, that's income, so that's good. We want that number high. And then we continue to expect adjusted free cash flow of between $800 million to $1 billion. Lots of money moving around. And we continue to expect GAAP operating income and net income in each quarter of this year. So, they're a great business. And CEO letter. So Palantir CEO Alex Karp's quarterly letter is available through Palantir's website and I could click on this and read you guys some of it if you're interested. And I will also put it in I'll just do that over here. I'm going to go back to Studio, and go to this so I can edit here. And I will do, quarterly letter. So I'll add that as well. And so let's see. Earnings webcast, quarterly letter. Maybe I wanted, okay, so webcast, put that there, and then below that, I'll put this, and I will copy this link, put that there. What the? No, I want to copy the link, not the link address, I guess. Copy. What the? Oh, yeah, because it's going to be a specific one. So anyways, I'll just click on that. Oh, man. Yeah, so copy a link address. Okay, yeah, so that's a very massive link. So Alex Karp quarterly letter available through Palantir's website. And so letter to shareholders, read more. And so I'll just put this over here. Save that. And if we want, I assume we want to read it in English. And so, we got about 6 minutes before it starts, so that's nothing going on there. Before I start reading this, though, I will check back on the chart. Still, in this bull flag pattern. Hopefully it's a bull flag pattern, but I'm going to extend this channel out further so it continues to track what the price is doing. And yeah, I think that's looking pretty good. Although this is, kind of a break below it a little bit, so maybe a little concerning. But yeah, here, okay, so from August 5th, coming from Alex Karp himself. Okay, so the playbooks of the past are no longer working. And even the people who had believed in them now know this. An ad's going to pop up, so I'm skipping it. So the enterprise software business had for years been crowded with... Okay, so I'm going to start the sentence over. The enterprise software business had for years been crowded with companies whose principal innovation was selling a product that was capable of little more than reincorporating and shuffling data around in what amounted to yet another storage system. A premium was placed on developing software products whose principal purpose was to sell themselves, and a perception of value became more important than value itself. The rise and increasing sophistication of artificial intelligence capabilities have exposed this extent of dysfunction within enterprise software deployments. This was the era of thin technology and an abandonment of any real interest in results. These companies, however, are now being swept to the side. They attempted to seize the cultural and moral high ground at the expense of anything resembling a commitment to outcomes. And society, not to mention customers, have grown disinterested in their theater. At the same time, national governments around the world dreamt that the promise of economic integration would be sufficient to coax adversaries to the bargaining table, that a credible military capability was an anachronism that could safely be discarded. They too were wrong, and their miscalculation has had significant and lasting consequences. We have believed from the beginning that a singular focus on creating value for our partners is the only way to survive and succeed over the long term, and that strength and dominance of the U.S. military must be preserved and defended. These beliefs, which should be commonplace and unremarkable, have today become radical and risky in certain circles of elite opinion. Yet, our business is growing at an exceptional rate because of these views, not in spite of them. It has become unfashionable to concede that we live in a world of constraints, both ideological and economic. But we will continue to build software for the world as it is, not as we wish it might be. I think that's pretty good. And so continuing on here with point 2, we generated $678 million in revenue in the second quarter of the year, an increase of 27% over the same period the year before. The growth of our business has been re-accelerating steadily, And we see an unprecedented opportunity ahead to capture and build on that momentum. And our financial performance, strong as it is, has always been a lagging indicator of the character and momentum of our business. And so this is the quarterly revenue growth, and we can see that it has steadily been increasing, going up between 3 and, let's see, is that 4%? Well, let's see, 1 and 4%, 1 and 6% every quarter. So, constantly going up. And we did see a 6% gap from last quarter, so that's looking pretty good. We've got about 2 minutes before it starts, and so I will just end on these two parts here. Our business has also never been more profitable. We generated $134 million in net income in quarter 2 of 2024, the largest quarterly profit in our company's 20-year history. The steady ascent of our profit reflects the unbridled demand for and understanding of the capabilities of our software. And so this is net income by quarter, and this is in millions of dollars. So we can see that, just a year ago, 28 million. Now we're at 134. So looking pretty good. And so with that being said, looking pretty good, I am going to flip over to here, as it does look like this is going to be starting pretty soon. Or if it's not already. Yeah, there's just no sound or anything. I got my sound in here. All right, and so I'm going to switch back over to the chart. We can see maybe we're testing the top of that, and I'm going to remove the display view. So, oh man, this should be Chrome right there. I gotta. This is so not display capture. I want application capture, and I am going to do this for Google Chrome. So that should look better. Yep. Hey, okay. The sound is starting, so I'm going to mute myself, and I will turn this on for you guys. So I'll be quiet, and I look forward to charting it while we see it happen.
On our investor relations website. During the call, we will
And
make
let me
statements
know if the
regarding our
sound
business
is all
that may be
right, but it should
considered
be
forward-looking
good.
within applicable securities laws, including statements regarding our third quarter and fiscal 2024 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for, or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We are thrilled to report tremendous results for our business, driven foremost by strong execution in our U.S. commercial business and continued U.S. government business acceleration. Overall revenue growth, excluding strategic commercial contracts, accelerated to 30% year over year and 10% sequential in Q2. Our exceptional results are a reflection of a market that is quickly awakening to a reality that our customers have already known. We stand alone in our ability to deliver enterprise AI production impact at scale. We are delivering these results in the face of an unprecedented enterprise AI opportunity. As noted by Sequoia, The revenue expectations from the AI ecosystem's infrastructure buildout have grown from $200 billion to $600 billion per year in just 9 months. The world is struggling with this huge problem. There's a great bottleneck between prototype and production. The world has also come to understand what we've been saying all along. The standard playbook does not and will not work. It cannot solve this problem. While many companies can build prototypes, the leap from prototype to production is substantial. Palantir has made that leap. Our focus is on deploying enterprise AI in production, solving meaningful problems for our customers. We have the right products at the right time, and our history means that we understand this $600 billion opportunity unlike anyone else in the space. We are uniquely situated, and you see that in our results now. Last quarter, we signed 27 deals worth $10 million or more and closed nearly $1 billion of TCV. One of the most notable indicators of our delivery is the volume of existing customers who are signing expansion deals, many of which are a direct result of AIP. We continue to see the greatest transformation in our U.S. commercial business, evident in the many AIP-driven deals closed last quarter. Our U.S. commercial revenue, excluding strategic commercial contracts, climbed 70% year over year. Our U.S. commercial ACV closed was up 44% year over year and up 19% sequentially, while our deal count in U.S. commercial was nearly twice what it was just a year ago. We maintain conviction in our ability to land new customers and subsequently expand those engagements as we sharpen our focus to taking our customers across the chasm from prototype to production. Tampa General signed a 7-year expansion, deploying AIP to deliver a care coordination operating system where we've helped them reduce patient length of stay by 30%. Panasonic Energy of North America signed a 3-year expansion, using AIP across finance, quality control, and manufacturing operations. AARP shared they're utilizing AIP to provide targeted, personalized experiences for their 29 million unique visitors on a monthly basis. Eaton deepened our relationship, leveraging AIP to modernize ERP deployments in addition to finance, sales, and supply chain use cases. Kinder Morgan signed a 5-year Foundry and AIP enterprise expansion with production use cases including storage optimization, pipeline integrity monitoring, and power optimization. These are just a handful of the significant expansions last quarter into production with AIP, and the magnitude of expansion is notable. A major North American industrial company started working with us in late 2022, expanded to a $5 million run rate in 2023, and further deepened engagement to a $20 million run rate this year. One of America's leading hospitals began working with us in 2021, generated approximately $1.5 million of revenue in 2022, over $4 million of revenue in 2023, and is on track to generate nearly $15 million of revenue this year. With regard to landing new customers, U.S. commercial customer count grew 83% year over year last quarter. Bootcamps remain a key go-to-market motion, particularly for prototyping what is possible with AI, but the real opportunity and our unique capability lies in moving from prototype to production with these customers. That is where we are focused. We closed a 7-figure deal with a large wholesale insurance brokerage firm for an initial production automated policy review use case just 16 days after the bootcamp. A leading convenience store chain went from prototype at a bootcamp to paid pilot in 25 days, then converted the inventory management and pricing optimization use case into initial production immediately following the pilot. Our product charisma remains unparalleled. We plan to leverage this combination of bootcamps and pilots with a focus on moving towards high-value production use cases to continue landing new customers. At the same time, we are heightening our concentration towards building deep production-level relationships with every single customer. The phenomenal strength of our U.S. government business shows the power and scale of our enterprise software delivery. Our U.S. government business continued accelerating, growing more than 8% sequentially for 2 consecutive quarters. We proudly received several notable awards last quarter, including a production contract from the Department of Defense Chief Digital and Artificial Intelligence Office, CDAO, to deploy and scale an AI-enabled operating system across the DoD, starting with an initial order of $153 million to support certain combatant commands and the Joint Staff, while additional awards can be made up to $480 million over a 5-year period. This award reflects the criticality of our software in our nation's defense capabilities. Shortly after, CDAO announced a new initiative, Open Dagger, to enable defense tech companies, traditional contractors, and government developers to develop applications and integrations on top of Maven, powered by Palantir, in a contract worth $33 million. We maintain pride in the mission-critical impact of our products and celebrate the long-term strength of our U.S. government business, evident in last quarter's results. Looking ahead, I've never felt more bullish about our business than I do today. We're charging full steam ahead, leading our customers across the bridge from prototype to production, with our ever-expanding product capabilities laying the paths for that journey. I'll now turn it over to Shyam to share more details.
Thanks, Ryan. Our customers have been ahead of investors in markets. Customers choose us not because we're delivering proofs of concepts, but because we deliver proof. Years of foundational investments in our infrastructure, and in particular in ontology, I'll note a widely ignored and discounted innovation, have put us in the pole position. Gen AI has made prototyping incredibly easy and charismatic, but with the same utility of a PowerPoint slide. The journey to production, as the market is now discovering, is fraught and requires a foundational set of technologies that we have uniquely invested in, creating the product pipeline that's needed to harvest economic value from AI. And that's a journey that we were pathfinders on with the U.S. Department of Defense starting in 2018, and one we continue to be the leaders in across both segments, government and commercial today. The bottleneck and the transition from prototype to production is a very hard set of technical problems. We didn't build those technologies eating berries in San Francisco. We had to be on the factory floor, in the foxhole, eating pain with our customers, seeing the secret truths of what does and doesn't work and metabolizing it into product. This has always been the secret of Palantir. It is the anti-playbook. Today's AIP developers will be the enterprise's next generation of builders. Apollo delivers eye-watering agility and responsiveness. AIP deprecates back-end development the same way that hyperscalers deprecated infrastructure, providing the mechanism to bring AI into production in the enterprise quickly. Our builder investments are feeding our product pipeline with our customers' developers in the wild. Compute modules have enabled the integration of our customers' own containerized applications into operational workflows. Today, this technology is powering exquisite missile warning systems in the US government and sophisticated production plan optimization across commercial. An Ontology SDK has enabled customers to build their own pro-code applications backed by Ontology, the critical ingredient for harnessing LLMs in the enterprise. And we pulled all of these investments together in code workspaces, where we have enabled an end-to-end development environment that lets customers treat their business as code. These investments have made us the emerging choice, not only for application developers, but also data scientists. Our platforms have become the fastest place for our customers to develop, refine, and manage not only their models, but integrated offerings that deliver business impact. Once again, history is repeating itself with data scientists as they abandon the thin playbook products of the past. We recently hosted 2 Champions Road events, one in Denver and one in Munich, that pulled together the most experienced and prolific customer developers to share the latest on our roadmap, but more importantly, to surface new opportunities to go deeper. At build.palantir.com, developers in the US, UK, Canada, and India, amongst a growing list of countries, can now access a free developer tier and a library of quick starts, tutorials, and reference implementations for themselves. This developer movement is matched on the government side, whether it's with developers in Armed Forces Ukraine or the US Army. In government, CDAO's recent contract award on Maven will enable us to scale those exquisite capabilities to the DoD enterprise and to bring integrated JADC2 capabilities across space, cyber, electronic warfare, and logistics. The CDAO Open Dagger contract also enables defense tech companies, traditional contractors, and government developers to leverage Apollo and the Ontology Software Development Kit OSDK to develop applications and integrations on top of Maven, all powered by Palantir's Mission Manager. And finally, fresh out of the AIP product pipeline, we are launching a new offering, Warp Speed. to power American reindustrialization. The software playbooks have also failed in manufacturing. And all the founders driving reindustrialization know it. This is why SpaceX built their own ERP. We created Warp Speed from our years of experience on the factory floors, helping customers build planes, trains, automobiles, and even ships. Today, we power production of jet engines, satellites, and weapon systems in the industrial base. Warp Speed, built on AIP, on our industrial AI, and with ontology, is the modern American manufacturing operating system that reimagines how to bend atoms better with bits. At the dawn of World War II, we didn't have a defense industrial base, we had an American industrial base. Chrysler made missiles, and General Mills wasn't just a cereal company. This is also what our future must look like. It is clear that the nation must reindustrialize and mobilize at warp speed to win. This platform will transform production in the value chains that power our kill chains. I'll turn it over to Dave to talk us through the financials.
Thanks, Shyam. Q2 was an exceptional quarter. Revenue growth accelerated to 27% year over year, exceeding the high end of our prior guidance by 5%, driven by the strength in our U.S. commercial and government businesses. On the back of this strength, we are increasing our full-year revenue guidance midpoint to $2.746 billion, representing a 23% year-over-year growth rate. We delivered these tremendous top-line results while expanding adjusted operating margin to 37%, highlighting the strong unit economics of our business. We also delivered our 7th consecutive quarter of GAAP profitability, generating a record $134 million of GAAP net income, and our 6th consecutive quarter of GAAP operating profit, generating a record $105 million of GAAP operating income. Our revenue and profitability drove a 7-point sequential increase to our Rule of 40 score from 57 in the first quarter to 64 in the second quarter. Turning to our global top-line results. Revenue continues to accelerate. We generated $678 million in revenue, up 27% year over year and 7% sequentially. Excluding the impact of revenue from strategic commercial contracts, second quarter revenue grew 30% year over year and 10% sequentially. Customer count grew 41% year over year and 7% sequentially to 593 customers. Revenue from our largest customers continues to expand. Second quarter trailing 12-month revenue from our top 20 customers increased 9% year over year to $57 million per customer. Now moving to our commercial segment. Second quarter commercial revenue grew 33% year over year and 3% sequentially to $307 million. Excluding the impact from strategic commercial contracts, commercial revenue grew 40% year over year and 8% sequentially. Second quarter commercial TCV booked was $377 million, representing 31% growth year over year. Our U.S. commercial business continues to see unprecedented demand, with AIP driving both new customer conversions and existing customer expansions in the U.S. Second quarter U.S. commercial revenue grew 55% year over year and 6% sequentially to $159 million. Excluding revenue from strategic commercial contracts, U.S. commercial revenue grew 70% year over year and 8% sequentially. In the second quarter, we booked $262 million of U.S. commercial TCV, representing 152% growth year over year. Total remaining deal value in our U.S. commercial business grew 103% year over year and 11% sequentially. Our U.S. commercial customer count grew to 295 customers, reflecting 83% growth year over year and 13% growth sequentially. We generated $148 million in international commercial revenue in the second quarter, representing 15% growth year over year and 1% sequential decline as a result of continued headwinds in Europe. We continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. Revenue from strategic commercial contracts declined to $9 million for the quarter. We anticipate third quarter 2024 revenue from these customers to continue to decline to between $6 to $8 million compared to $15 million in the third quarter of 2023. We continue to anticipate 2024 revenue from these customers to be less than 2% of full-year revenue. Shifting to our government segment. Second quarter government revenue grew 23% year over year and 11% sequentially to $371 million. Second quarter U.S. government revenue grew 24% year over year and 8% sequentially to $278 million. As Ryan mentioned, we were selected for several notable awards in Q2, which led to the strongest U.S. government bookings quarter since 2022, reflecting the growing demand for our government software offerings. Second quarter international government revenue grew 21% year over year and 18% sequentially to $93 million, primarily driven by additional funding from a partner nation related to our ongoing efforts in Eastern Europe. Second quarter TCV booked was $946 million, up 47% year over year. Net dollar retention was 114%, an increase of 300 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q2 of last year. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. commercial business over the past year. We ended the second quarter with $4.3 billion in total remaining deal value, an increase of 26% year over year and 5% sequentially, and $1.4 billion in remaining performance obligations, an increase of 41% year over year and 5% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $254 million, representing an adjusted operating margin of 37% and marking the 7th consecutive quarter of expanding adjusted operating margins. Q2 adjusted expense was $425 million, up 4% sequentially and 7% year over year. We continue to expect expenses to ramp through the back half of the year as we invest in the product pipeline and hard technical problems in debottlenecking the journey from prototype to production that Shyam just outlined. We remain focused, however, on calibrating expense growth below revenue growth for the full year in order to continue delivering on our goals of sustained GAAP profitability and operating income. In the second quarter, we generated GAAP operating income of $105 million, representing a 16% margin, our 6th consecutive quarter of GAAP operating income and 5th consecutive quarter of expanding GAAP operating margins. We generated second quarter GAAP net income of $134 million, representing a 20% margin, our 7th consecutive quarter of GAAP profitability. Second quarter adjusted earnings per share was 9 cents and GAAP earnings per share was 6 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 64% in the first quarter, a 7-point increase to our Rule of 40 score from the prior quarter. Turning to our cash flow. In the second quarter, we generated $144 million in cash from operations and $149 million in adjusted free cash flow, representing a margin of 21% and 22% respectively. We expect cash flow to ramp through the back half of the year in line with expected timing of government and commercial year-end collections. Through the end of the second quarter, we repurchased approximately 1.2 million shares as part of our share repurchase program. As of the end of the quarter, we have $973 million remaining of the original authorization. We ended the quarter with $4 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q3 2024, we expect revenue of between $697 and $701 million, and adjusted income from operations of between $233 and $237 million. For full year 2024, we are raising our revenue guidance to between $2.742 and $2.750 billion. We are raising our U.S. commercial revenue guidance to an excess of $672 million, representing a growth rate of at least 47%. We are raising our adjusted income from operations guidance to between $966 and $974 million. We continue to expect adjusted free cash flow of between $800 million and $1 billion, and we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Thank you for participating in our earnings. We founded this company to be a ray of light to America and our Western allies. And in doing so, we built software for the institutions as they ought to exist, not as they do exist. And of course, the whole playbook around building software, building institutional software, building software that would be transformative, and especially in the current context around AI and large language models, flew in the face of everything that people have been taught to know about enterprises, what makes them work, how they can transform themselves. what software products would be valuable, what software products people would adopt, how would they adopt them, how would you get value from analysts, users in the software context, how would you transform manufacturing, how would you use, in the current context, large language models, not as an act of self-flagellation or something that just makes a small group of people richer, but in a way that you can extract value in existential life and death contexts like the battlefield, or in institutional or commercial contexts like the transformation that is happening all across America and in some other countries. And in the face of this, we made bold claims that looked ridiculous to many people. One bold claim was these large language models will not work without foundational software. They will not work without a means to process them. They will stay something like self-pleasuring or PowerPoints, which is the purveyor, which are sold to institutions as a way of deceiving institutions from transferring their high value revenue to other enterprises without actually transforming themselves, which were addictive and thin and led to dysfunction in enterprises, much like their allegory in the political world of wokeism, became slower, dumber, not able to actually produce results. And we built the infrastructure you need to move from self-flagellation, PowerPoints, and prototypes flawlessly into production. Production meaning your enterprise gets faster, it runs better, the margins are better, the people inside the enterprise become more valuable. Your tribal knowledge in your enterprise, the knowledge which differentiates you from all other enterprises, becomes truly valuable. It becomes a weapon in your hand, whether that weapon is in the commercial context to make what you know how to do better than anyone else work better than anyone else by making engineers better, by making the workers more able to do things engineers would be able to do, by treating your company as a portfolio as opposed to dots on a PowerPoint. We believed, and the numbers now show that we were right, that by doing this, we could give America and its allies a structural advantage in the commercial area, which we have seen, and our numbers prove, and arguably even more importantly on the battlefield, which we can't talk as much about, but is the absolute most important area where America and its allies have to have dominance and leadership, that we had a structural advantage. And what is gratifying about our this quarter, and in general about what we've done, is not the banality that we were right and the playbook purveyors are obviously somewhat laughable. It is that you can build a great business, be aligned with America and the West, that alignment will make you stronger and better, that your software products will actually be products and not PowerPoints, and that you can actually build something with the best people in the world, the best investors in the world, that will lead to structural advantages. Of course, all along the way, we had many, many doubters. We had people that thought we would never be profitable. Now we are over 7 quarters in profitability. We thought people that we would never be able to grow the revenue. We'd never be able to re-accelerate the U.S. government because of it's often opaque, but we asserted that product superiority would overcome many of the vicissitudes and difficulties of working with the U.S. government. Witness re-acceleration. We asserted that our products were the precursor to making LLMs valuable, that we would productize how you create this value, much the way hyperscalers, as Shyam had mentioned, had productized other technical issues, and that we would give that productization to our customers. Witness our 70% after SPAC quarter, the third quarter in the row where we're growing at what amounts to a ridiculous rate. And there's witness the re-acceleration of our global business ex-SPAC to 30%. Witness our backlog. Look at any part of our business. Then it is like, well, how are we doing this? Is a really long and interesting question that people will dedicate their academic careers on, but we do not have time to address, and it may not be learnable for everyone, but we do it. And the single most important part, however, of this is that we are going to play a determinant role in making America and its Western allies the dominant force again in this world. And because of that, the best times for this company are not in the past. I would say the single most interesting thing about this quarter, if you had to reduce it to one simple fact, after 20 years, after changing the way people do intel, after changing the way the battlefield works, after changing the way people procure software, after exporting our platforms to our allies, after punishing our adversaries, after building a commercial business, after DPOing, after seeing it all reaccelerate, the best times for us are yet to come, and we are planning to just take our energy and run this business as a business of which we are, which is our owners. We are owners with a very long-term focus for the best interest of our country, our allies, and our Palantirians and our investors. And so I'm very thrilled to have you participate in this, what for us means historic earnings. And last not least, the world is on the precipice of what could be a very severe set of violent interactions in the Middle East. And it goes without saying that at Palantir, we know where we stand, and we are very much supporting America and its allies in the Middle East, including Israel. Thank you.
Thanks, Alex. We'll now turn to a few questions from our shareholders before opening up the call. Axel asks, what is Palantir doing to be different from its AI competitors, and what is the company's plan to stay competitive?
Thanks, Axel. Well, all the value and where the market is completely bottlenecked is on that transition from prototyping to production. And that happens to be the place that we are most differentiated. That differentiation is built on more than a decade of deep technical investments, technologies like the ontology, OSDK, the primitives that we have that permeate the platform, security, functions on objects, actions, write back, machinery, automations, and a deep product pipeline that really is focused on addressing this very problem, on this transition from prototyping to production. And I think when you think about the ChatGPT moment, it so very clearly invalidated the thin product playbooks of the past. I think this bottleneck is doing that same thing to AI software. It is so easy to create an AI prototype, the equivalent of effort of making a PowerPoint slide. But it's actually very, very hard to get that in production, probably 10 to 100 times harder than traditional software transitioning to production. And therein lies our entire opportunity in the market. That's what you see with the expansions that have happened with Panasonic Energy and Tampa General, and that's what you frankly see in the numbers of this quarter.
Thanks, Shyam. Our next question is from Jacob, who asks, we understand why Foundry has become the operating system for the modern enterprise. How does this change with LLMs?
Well, the market doesn't need point solutions, even if it's slightly addicted to them. And our customers can't solve their business problems with hyperscaler infrastructure alone. They need a system that organizes and orchestrates the interaction of their physical business with their technology, with AI and LLMs. In the same way that your operating system orchestrates and organizes your hardware with your applications. And in the same way that your operating system gives you application development frameworks like AppKit for Mac or WinUI for Windows, Palantir's OSDK and ontology is that application development framework for the entirety of your business that allows you to treat your business like code, leveraging the primitives that we've built that extend LLMs throughout your enterprise.
And just as a point that, we've already mentioned, but, a lot of what we're doing sounds complex on the outside, but what is not complex is the customers already understand they need it. So it's like a lot of our actual advantages, the customer is way ahead of investors, way ahead of people investing in this. And we're way ahead of our customers, and we have distribution. So typically in a revolution, the revolution comes from like small companies somewhere, but this revolution is coming from being ahead of where the customers are, and the customers are years ahead of what analysts and others think. And we are actually monetizing simply the fact that we're ahead of our customers and the years ahead of everyone else. And all of these things that Shyam was talking about how does an ontology work with an SDK? How does that work with an enterprise? How would you actually use a large language model in a way where it's differentiated, meaning you use the right large language model at the right time, under the right conditions, in the logic, meaning in the way the business understands itself, within the context of the security and security logic of the business. Those things are largely not understood on the outside, but every single person in government who's trying to use them or who is using them, every single customer who's buying this, witness the numbers, they either understand this overtly or they understand that nothing else works. And in many cases, they simply understand that nothing else is giving them any value. And they're increasingly getting tired of paying for things they either don't use or they shouldn't use.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Look, I think historic quarter for Palantir. So congrats. Does it feel out in the team? Does it feel like you're starting to now, in terms of the conversions from the boot camps to deals, it's starting to accelerate. It seems like that based on the actual quarter. But can you just give some granularity there?
Yeah, I can give. First of all, I think the numbers speak for themselves. We closed 27 deals worth more than $10 million or more, $1 billion of TCV in quarter. And so I'll start with the numbers because they speak for themselves. Boot camps are an important part of that motion. We're seeing them expose customers to new opportunities and new potential customers to opportunities. That being said, it was, as Shyam was highlighting, what everyone underestimates is the immense challenge of deploying enterprise production AI software at scale. And so we're very much focusing our energy and going deep in production with those customers. And that's the massive opportunity before us. And that's where we're running at full speed. You see that in the numbers. You see that in the customers' reaction, who are blown away by the impact we're having for them and demanding more and more in that direction from us. And really where we're focusing our energy.
Maybe a slightly orthogonal, indirect way of answering your question is, if you take the battlefield where these things, the few places these things are, LLMs are in use, or the battlefield where other forms of AI are in use, and you take U.S. commercial, what you're really seeing is a very tight learning circle. What works, what doesn't, why? And that's very different than places that aren't working. And America has many businesses that are very strong and they're very, very agile, so they're learning very, very quickly. And then, much like people watching this call, they're like, oh, okay, this is working. There were leaders like you who predicted this would work, but most people actually, our customers, want to see it in production and then say, okay, well, why is this working? And that's a separate. And what's very special about what's happening now is you have more and more people who are like, okay, I know this works. Well, this is something that's not quite there, but I think it could work. And we're very much moving into the phase of, yeah, this is working. Our adversaries know this works. Our U.S. military knows this works. People on the ground knows this works. And it's a very similar in U.S. commercial. And that's what's generating the 70% number that is kind of, jaw-dropping. Like, the jaw-dropping numbers are being generated by, okay, this works. How do I expand? And explain to me how it's working. Can we expand these things? And by the way, our innovation is also because we're like, okay, we see this works, but this could work 5 times better if we had different kinds of innovation that no one else has.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thank you, and good afternoon, everyone. I'm going to try to squeeze 2 questions, as usual. So the first one, I'm curious about Warp Speed. What is it? Is it like a new system that allows companies to build their own ERP system? Is it something that runs on top of your existing old school legacy ERP system? Or is Palantir creating like a solution that is ERP? Like a little bit details about that. The second one is not just Warp Speed, but also all this American industrialization. GAO posted a report recently where they've said software and implementation are the 2 biggest barriers for the US to be able to produce the weapons that they need. What is the biggest barrier or like hurdle for the US primes, or especially the old guard primes, to come to you and let you help them reindustrialize, produce, and get back on track on these like multi-billion-dollar contracts they have? Thank you.
Yeah, thank you, Mariana. So with Warp Speed, it really is we conceive of it as an operating system for the modern American manufacturer. It touches not just ERP, but also MES, PLM, it's PLCs, so it's interacting with the factory floor. And we think there's an opportunity to reimagine this. I think the kind of congenital defect for most of this software, it was designed historically in the 70s for the CFO. Why would you do that? If you were starting over today, you would build software that was designed for the head of production, that was focused principally on production, and then how you integrate both your extant legacy systems and use Warp Speed in place of the investments that you haven't made. I think the big opportunity, so if you go to the big legacy manufacturers and you say this, it sounds crazy. They've made a bunch of historical investments. They're not yet convinced or even aware of the fact that the legacy software playbook doesn't work. But if you go to new manufacturers, the one that are powering the reindustrialization of the country, They all know this. They're all alumni of the Tesla SpaceX world where they built their own systems from scratch, principally because the other stuff doesn't work at all. And they also know they can't afford the 300 engineers it would take to build this completely from scratch, or the time it would take to do that. So there's this very powerful role of taking AIP, building the applications on top of it using the OSDK, and delivering the integrated suite of applications that are also malleable to the business. Because I think one of the other key insights here is it's not actually believable that the same ERP manufacturing system that you use to build rockets is what you would use to build rackets. And what is the right way to think about grafting the software around the manufacturer in a way that gives them alpha, not just creates a huge amount of services for these system integrators? We live in a world today where it's $1 of license for $9 of implementation that never seems to quite work. Who is really happy with the implementation of these systems? Which ones are even happening on time? Who can say that those systems didn't fall apart in 10 seconds when COVID supply chain disruptions happened, right? There's an entire opportunity to reinvent this now, and I think the bolus of energy around national defense and reindustrialization is catalyzing this opportunity.
Well, and Shyam's leading this charge, but the reason it, I think, is likely to work is because not just America, but every allied nation has the problem that they cannot get their military production to work. Your question is not really two questions. It's what are you building, from my perspective, and why is it likely to work? And they're very linked. It's likely to work because in every single Western country, when you talk to these leaders in private, the conversation I often have with them is, what could we possibly do to make manufacturing work so we will actually be competitive on the battlefield? And the answer to that for these countries really is reimagine how you produce. And the people who do it are going to be people who are alumni of the companies that have actually built companies correctly. Call it the Palantir alumni, and people from the SpaceX network are really the only people who have done these things. And the first thing they want is a software program that will allow them, including with large language models and AI, to build the way you ought to build. Ought does not mean build near term in the interest of your CFO so you can IPO quickly and build something that's fake. It means build something that is real, build something that's sustainable, build something where the production is actually production of a product. And that aligns very squarely with how Palantir wins and how we build things. And that's why this is a super important thing we're working on.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end today's call?
Well, again, thank you for your support. That we've had good and bad times. This is a super important time for Palantir because we have proven to the world that what we do is quantifiable and real. We are focused on growing this company to be much more impactful, much larger, and much more valuable. And we appreciate your support, and we know that many of you also support us because you realize that we are value aligned with your values, which means fighting to make the West a stronger and better place, including on the battlefield. And that battlefield may be upon us now, and we appreciate your support and do what you can to help America and help our allies. Thank you.
Thank you. That concludes Q&A for today's call.
All right, so hopefully you guys enjoyed that. I'm just going to close down these windows, open this up, and switch back to the chart. And so, yeah, I feel like Palantir is like, if you're going to invest in one company, it should be Palantir. Yeah, still holding this, what I view could be a bull flag. I was surprised that there wasn't some response in the chart with something being said that, actually, unplug my headphones because it makes me feel weird. But yeah, I'm surprised that we didn't see something that triggered, a move either to the upside or downside that has just been, hanging out here. And so I feel like this is likely to break to the upside because that just looks like a bull flag. It looks super strong, just holding this. maybe a double bottom right here, with these 2 points. So I think that this just looks really good. For the fun of it, if you were here at the beginning of the stream, I bought a $30 strike call that expires this coming Friday just to swing it for premium, just to have some fun. I do have some shares, but not a large position, just because I typically go with, $10 or less stocks. This is a little pricey for me, but I have been adding just because I don't want to be left behind. I believe in the company, and clearly, just fundamentally, they're the kind of company that you want to have. They don't have, there aren't going to be any TikTok or Instagram videos of employees going to the yoga studio at Palantir headquarters or anything, or making, whatever lattes and eating whatever food. So, I think that they're just a really, really strong company in so many ways. And I think that this is going to be breaking out to the upside. And so I'm happy I got the call. I'm happy I have some shares, and I plan to continue to add. Even if it does go up, a lot higher, my plan is to just identify levels that might be pulling back to add more. I did get a couple, like I said, small position. I've just been doing individual shares over the past few weeks. And I bought a couple this morning, and I plan to continue to add one every week, but on dips that we see. So I'm not, my average is not too crazy or anything. And so right now with the price at 27.45, I'm in the green, and I'm not emotional about it because it's a small position. So I like that. But yeah, with this call, I'll probably sell that for the premium once the market opens tomorrow. I imagine with it going up 13% right now, if it holds these levels, that will still be in the green tomorrow, but it may not be. But with that being said, before I ramble on too much, I'm probably going to close down this stream, and then I'll add timestamps so other people can access it. But with that being said, I hope you all did enjoy this earnings call stream. And if you did, make sure you like the stream, make sure you like the videos that you do enjoy, and always share your comments, whether in the live chat or the comments down below. And of course, make sure you subscribe to the channel for more streams and videos like this. Tomorrow, I will be doing an earnings call. I'll pull it up because it's slipping my mind right now. What earnings call is tomorrow? Let's see, I did post it on the channel, which we can see from the community tab here. Let's see, tomorrow is going to be Rivian in the after hours. So I look forward to streaming that. If you guys are interested in Rivian, I will be doing that before their earnings call, going over the chart a little bit, but I probably won't be getting into the unusual whales and doing such a long stream as this has been going on for just about 2 hours now. But yeah, I'll close on the chart here, just looking really good. Congrats to you all if you were brave and bought the dip this morning, or were brave and held through the dip this morning. I know there was some panic in the pre-market, but that was just a great opportunity. And right now, we're going to be seeing this going up higher, I believe. And I guess, what I should close on is the daily chart. Current price is right around here. I could see us, bumping our heads a little bit there, but I could also see, it ramping up even more, as we did see this 2 earnings ago from the February earnings call. We did see a gap up that was, over 30%. And so we might be seeing that, because let's see. I think this is actually an interesting point to end on. The close on that, day before or the day of earnings, it gapped up about 21%, and then, continued up to 30. So, if we gap up 13%, if we're at this price at open, it could still go up higher, just like it did here, and then continue for days. And so, I think that, it's quite possible that that call that I have could be closing this week in the money, but I'm not going to be holding that long. I'll be taking, profits probably first thing in the morning, and I'll continue to hold my shares. And yeah, I will close on Ben's request to go over Blink. And so that'll be the only request that I do for this one. But yeah, I'll just pull that up real quick. And so yeah, Blink looks like it bounced at this level, 258. And I had been talking about, I've been discouraging buying up here, talking about 283. Unfortunately, we I don't have a position in Blink, but we as in retail, bounced from this prior low of 258, but we actually swept that low, hitting a low today of 256.5. So I do think it's good that we did, close higher, but, I don't know how significant this is. It is based on pivot lows from over here. I think that it's a little bit precarious being below that level. And it looks like their earnings calls on Wednesday. Unfortunately, I'm working on Wednesday. But I would like to see, if I was in Blink, I would like to see price closing above this uptrend, which tomorrow that would be closing above, let's say 280. I think that would be good. Earnings, I'm not sure if they're before or after the market opens, but I would think tomorrow we want to see a close above 280. So that's what I would be looking for, because it does look like, it kind of got rejected not only from the 786, which was the level I was talking about before, 283, but it does look like it's closed below that level. And so what I actually might do, I might actually just record a Blink video that I'll put out a little bit later. I'm going to take a break from the computer, but I'm just going to start this, like it is a video, and then I will release a Blink video, so this can be viewed a little bit more, by more people. I'm just going to adjust this sidebar, and I will start this, like it's a normal video. And so, let's see. All right. Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Blink Charging, ticker symbol BLNK, which closed on the day August 5th at a price of $2.76, being down about 2.5% on the day. And we can see that we did get a pretty nice bounce, a lot of bounces in the market here, buying the fear, buying the panic at the start of trading on Monday, and then price going up. It looks like from the lows it's up about 7%, so quite a nice dip buying opportunity at the lows, which swept the prior lows over here at 258 that was hit on July 2nd. We hit slightly lower than that today during market hours, hitting a low of $2.56.5, bouncing, like I said, up about 7% from that level. But it does look like price is at a somewhat precarious level, considering that earnings are coming up on Wednesday, August 7th. And so the reason why it does look a little bit precarious, following this bounce, is because of this purple uptrend, as well as this 786 level at 283. Which I had been thinking would be holding or could be holding as support. We did, of course, see this gap down. And now with the move up, getting not only rejected from 283, having hit a high on the day of 284.7, we closed at 276, not only below that 786 level, but also below this purple uptrend. And so if I take a step back, we can see where that level originates from, and that is from over here, the low of 218 hit on January 17th, as well as the low hit on March 22nd. We can see that uptrend. We did break below it here, as well as over here a little bit. We're trading below it now. But this level did strike me as being the neckline of a head and shoulders pattern. We did not get a measured move to the downside. Instead, we bounced from this level at 222, which was the pivot low going back to October 30th of last year. That was, yes, at a price of 222. Wick low there. And so we did bounce from that. Now trading below that uptrending level, I'm thinking that if price is closing below right around 280 tomorrow on Tuesday, August 6th, that could be suggesting that we are closing before earnings day below a level that has been key support in the past. It might be now acting as key resistance. And we could then be seeing either some downside or maybe some consolidation, not being able to get above that level. But, so I think that it's kind of, at a precarious point. I think that tomorrow, Tuesday, August 6th, we need to be seeing a close above 280. But, it also, could be breaking above that level if earnings are good. So, I think it's a tough place to be at, to be considering just below resistance. But really, if you think about it, you want to be selling below resistance, buying above support. And right now, we are below two levels that do stand out as potentially being resistance. Some things that I can throw up here to maybe give us some more insight. If I throw up the volume profile, it does look like there is, and I can, adjust the time frame and that gets adjusted. So got to take this with a grain of salt. But it does look like, adjusting it like this, it looks like there's a good amount of volume traded above current price, a volume shelf that we're below, hitting our heads on. So, like I said, that price being, I said 280 before, and that does look like it is the volume average low here, highlighted over here on that y-axis, 280.2. So it does look like we are below resistance. So I would, if I was to bet on this, which I am not, I would say that this is probably more likely to be coming down. Maybe it comes down to 250, that red line that I have drawn there. That is probably just, an arbitrary $2.50, that being kind of, a psychological level. $2, 2 quarters, maybe we could be coming down to that level and then testing that as support, but we also could be coming back down to 222 after earnings. So a little bit precarious, so do trade with caution. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. And so, that is, my little video. I will edit that, release that later this evening. So thank you, Ben, for the request here. And, I'm just going to remove this volume profile so it's not too cluttered. But yeah, I think that this one looks a little bit tough. But, it is up a little bit in the after hours, really just 2 pennies. But, like Palantir, we saw, a bounce following the down move. I just see, maybe this purple line's arbitrary, but I just see that as being resistance. So I'd be cautious around earnings. And that might be meaning, just holding on. Don't be buying, don't be selling, just chill out and see what happens, see how it responds. Maybe there'd be some dip buying opportunities, or maybe there'd be an opportunity to take some profits, if it does launch higher. But with it going higher, I could see 308.8, 309, 310 being a level of resistance, given that it was the bottom here. So if it does launch following earnings, I'd look for some resistance around $3, also corresponding with the 618 here, and the 65% retracement from this up move, and that is the golden pocket there, also corresponding with this gap fill. So yeah, I think if price is going up to 310, it's going to be bumping into some resistance there. So that might be a good level to trim or take some profits at. And with that being said, I'm probably going to add that little clip to the the recording that I did before. And so that should be hopefully a useful video, whether it goes to the downside or the upside. Hopefully there's a little bit of guidance there. But, I think it's really good to just be, prepared for either way. But I would think that, unfortunately, it's below resistance. It's likely going lower. But I could be wrong. So so Ben, you're welcome. Thank you for the request. And you'll have that video out. I'm probably going to take a break from the computer, go for a little walk while the sun's out, and then I'll come back and release that video later this evening. That might be the only video tonight because I have been streaming and being, on Unusual Whales a lot today. So I need a break from the computer. But yeah, I hope you guys enjoyed this stream on the Palantir earnings call. And I hope you're looking forward to the Blink video that will be coming out later this evening. But yeah, thank you so much for watching. Have a great evening. And I hope Tuesday starts out strong for you with, some more moves to the upside, some more green candles. But yeah, take care, you guys.